Welcome back to Morning Express. This is your money. And of course, it is 2017, the third day of January. I know a few of you already feel like it's mid-January, but it's only the third day of January. And many call this the longest month of the year. But how do we go about planning our finances in January and the rest of the year 2017? Well, in studio to discuss this with us is Einstein Kihanda, the CEO of ICEA Lion Asset Management. Many thanks for joining us in studio this morning.
Thank you.
All right, so let's begin with the question on top of everybody's mind. It's 2017. People probably spent all their savings in December, and they're wondering, where do we begin in January?
Okay, I'll take you probably back a few months. Let's go to 2018. So next year, just in order to help you plan finances in advance, I think because we all know that you're going to spend a lot of money in Christmas and school fees will be due in January, I think it would be good to start off by saving and preparing in advance, even if it's a small amount of money, because we probably have an idea of how much money we need to spend. So it will also help in terms of being able to plan and save and have enough finances to cater for those requirements when they fall due, because we know that they will fall due.
Many people act like January came as a surprise, and we know after December, January is coming.
Yes.
Right. Okay, but what about the discipline in saving that money? Because in January, and I'm thinking of saving an extra 5,000 shillings for January next year, that discipline is also something that needs to be nurtured.
That is true. And I think a starting point would also be that if, for instance, you're employed or you have a regular income, probably one way of doing it is actually having a structure or a scheme that ensures that you don't actually see that money even before it gets to you. So, for instance, if you're employed, you can come up with a saving scheme that deducts the money that you require for saving even before you get it in your salary, say through a net-off system. So that way, that money never even actually gets to you. Because I think the biggest problem with saving is actually having that discipline of getting that money out of your bank account and actually saving it. So I think the discipline, knowing that we may have weaknesses as people, I think one way is to actually deduct that money before it even comes to you. So that way you'll ensure that you don't even see it, and you'll also be able to structure your finances and your lifestyle to suit the finances that you have. So I think that's one way of doing it. I guess the other thing also is that over time it also becomes a discipline, and once you're able to have a structure and regularly save, I think it also becomes a regular habit, just like many other habits that we develop over time.
Yes. And of course, even more important than saving would probably be investing those savings, so you don't get tempted to go and withdraw this money. You have over 16 years of experience in investment analysis.
Yes.
But when many think of investment, they think, I must have at least 50,000 shillings and above to invest somewhere. What kind of investments can people make with very little savings?
I think that's one notion that we need to dispense with first, that you can only invest if you have a huge amount of money. That's not true. Actually, there are many saving schemes that are available in the market, including even what we offer ourselves as ICEA Lion Group, that will allow you to invest from as little as 2,000, 5,000 shillings on a monthly basis. That way you can be able to save that money regularly.
Right.
You can invest that money in what you call unit trusts that allow you to invest in the money markets, like treasury bills, treasury bonds. You can invest that money in an equity fund that will invest in shares in the stock market, and that money will continue to grow over time. You can invest in a bond fund that will invest in long-term bonds. And you can also invest in a balanced fund that will help you to be able to grow that money over the long term. So there are structures and products that will enable you to invest as little an amount as possible. I think what that then enables you to do is that over time, with that discipline, you can then be able to grow your investment portfolio over time. I think the biggest problem, and I think the biggest challenge that many people face, is lack of information. Because with this kind of information, it will enable you to know that there are avenues that are available. So you don't have to have your money, in your bank account every day, and you're watching it, and you slowly fritter it away, through spending. So I think, to answer your question, you don't need to have significant amounts of money to start investing.
Right.
Start where you are.
Start where you are.
Yes.
All right. And let's talk about very important skills when it comes to managing your finances. Things like creating a budget, for example, for the rest of the month.
Yes.
Things like, say, trying to make sure that you save as much as possible. But how many people were not taught about that growing up? Nobody really taught you how to make a budget unless you went to business school. So how do Kenyans go about that?
I think that I would say that is also an issue, in terms of education, because money, at the end of the day, for all the professions and careers you're going to, get into, you will handle money. So I think it's a huge failing that we actually don't have whether it's in our curriculum or in our education system.
Because this should be a general course.
Yes, it should actually be a general course. And unfortunately, we only end up learning over time, through experience and through mistakes.
Right.
But in personal financial planning, I think the first thing is actually a budget. And a budget is really a guideline that helps you determine how you're going to spend your money, using what you have to determine how you're going to spend your money. I think a starting point will actually start on a monthly basis, but over time also build it up over, say, a year. Because what that does is that it also gives you the opportunity to plan ahead, so that you're not just talking about what you're going to spend in this particular month, but you're also talking about other plans that you may have. You may have plans to go to, invest in education for yourself, for your family. You may have plans to buy some property or invest in a car. So I think the starting point is a budget that helps you to manage your resources and also helps you to utilize what you have. It also prevents you from overspending and living beyond your means, because what that does is that it can also create without a budget, it means that you can overspend, and it also maybe put you in debt, and that could be a detriment to your personal financial development. So the starting point is a budget. The discipline, of course, is required for you to stay within that budget. It means that you may not be able to buy or spend on everything that you want. And what that does is that it helps you to weed off what would be unnecessary expenses and enable you to focus on really what you need to be able to continue to grow.
But not everybody is as disciplined, because there are those, I have fallen victim of that sometimes. You make a budget and it's way above what you earn, So, how important, let's talk about money 101. It is important to spend less money than you earn.
Actually, that's the first discipline in terms of growing your wealth, is that you need to spend less than what you have.
Right, because somebody would say, I earn 100,000 shillings, and so this month I'm going to make a budget worth 100,000 shillings. And then you spend the entire 100,000 shillings.
Yeah, when you do that, it effectively means that you cannot progress beyond where you are. There may be some decisions you'll need to make, probably some painful decisions. You may need to determine that you'll have to spend less on some maybe entertainment, probably spend less on housing, maybe move from where you are to a cheaper place or a cheaper, education. So that's one way in terms of trying to structure your expenses, your budget to meet your, your expenses. The other way, which probably is a bit harder, is also to see how you can increase your income.
Right.
Because by increasing your income, it also means that you'll be able to have more resources available for you to spend, and so that you can be able to also progress in terms of your financial growth.
Right.
Yes.
What about planning for the unforeseen? Because I can bet you, in this January, not many people are prepared for emergencies.
Yes. You remember when I talked about the personal financial, the planning ahead of the year, the need to save for emergencies is critical. And here we're talking about the unforeseen developments, accidents, sickness, any medical requirements. And that should also help because it would put you in a position to be able to deal with those kind of unforeseen emergencies. But I think once you also start setting aside those funds, it means that you will not only have funds, for planning ahead in terms of, say, we're talking about Christmas, we're talking about school fees, but it also means that you have funds that you can be able to utilize, not only even for emergencies, even for, investment opportunities. You may, in the course of your engagements and interactions, come across, investment opportunities that will see you, progress into the future. So that should also help you be able to have the finances to do that. So I think saving here what we're really talking about is the need for saving, that it's really critical to have those funds set aside to be able to have money to meet those kind of obligations that would arise. So savings, a budget, and the discipline that comes with it is really, really critical.
All right. And then we were talking about saving a little earlier, and you mentioned all these different types of saving that a very low-earning individual can also invest in. But it's also very important to find a way to make your money work for you.
Yes.
Right. And so how do people go about that?
Now, as I said, the major issue is really about information. Now, if you, for instance, look at the daily newspapers, you'll find there's information about, unit trusts. Because I talked, for purposes of saving, the unit trust products are the really critical area that one can engage in terms of saving. So it is about information. So there are different companies that provide this information. And I've mentioned that we as ICEA Group are one of the companies that, we're a broad financial services group that offer all these products. So we have a website, and this information can be accessed, through the website. You'll be able to see application forms that provide you with the information that you need to be able to, complete the documentation that is required. Because at the end of the day also, as financial services providers, we are required to ensure that we have all the information that is required for purposes of our clients. There are certain requirements you need to meet in terms of regulators. So once that you complete all that information, you are now able to open an investment account, and you can invest your money in the product that you desire. So the starting point, as I said, is information, and then immediately after that, invest that money through the bank account, because the bank account information is also provided. And once you start sending out that money, you will then be able to get statements that show you how your investment is progressing.
Right.
And that helps you to, have the confidence that I can see my money growing, because your statement comes out every month, or it can even come out, and you can even get a statement when you require it, and it will show you how your investment portfolio is progressing over time.
Right.
So it's that initial action that is required, and then that discipline. Now, talking about the discipline also, remember when I talked to you about, when I mentioned about the fact that you can remit these funds even before you get, it gets to your salary. You can even have a standing order or a check-off system where you remit this money every month. So you don't actually have to sign that check and take the money.
You can be tempted not to sign the check.
Yeah, you can be tempted not to do it. So what you can also do is have that money automatically deducted from your bank account and remitted directly. So that way, it also works for you, because you're actually just seeing the growth in your portfolio over time. So it's a very important element, because it reduces that need for you to continuously have to take that action, and enables you to continue to grow your investment portfolio.
All right.
Yeah.
And Einstein, I'm seeing several questions here from our viewers, and two of them are touching on credit card debt.
Yes.
So let's talk about the credit card.
Yeah.
This can really mess up someone's finances,
Yes.
or it can make them easier. How do you go about choosing a credit card? Is it just because I bank with ABC, I must take a credit card from ABC?
Again, I'll answer that by saying, first of all, it's about convenience, because, again, the credit card is really about you effectively borrowing money.
Right.
Because what it does is that it enables you to make purchases that help you to, without having to come up with the cash.
Many guys don't understand this is still a loan.
Yes, it effectively is a loan. And of course, one of the things that one needs to know is that, and you can get this information from your credit card statement, because it shows you, for instance, how much money, where you spent your money. For instance, if you went shopping at a supermarket, it shows that this is the amount of money that you spent on this particular day. But at some point, it also shows you what the interest due is. There's actually an interest payment. So you're actually effectively borrowing money. So I think the thing is also to have a way of managing that in terms of determining what your limit. Because the other thing is also, depending on where the credit card, the issuer, it could be your bank. And depending on which financial institution it is, there's also a limit as to how much you can spend based on what the bank has assessed your credit worthiness is. So, of course, the important thing is to make sure that you manage that within your limit, and also be aware that there are interest payments to it. But even more important is that, especially now in the last several years, if you fall behind on your payments, there's a likelihood that you will be your name will be referred to the credit reference bureaus.
Right.
And what that means is that you'll be ineligible. Say if you want to borrow money from a bank, it means that you can't actually borrow from any financial institution if you fall behind on your debt payments. So it's important for one to be aware that you're actually borrowing this money.
Right.
And so that it's actually a loan that you're taking, and therefore you also need to make sure that you manage that within your own financial commitments. So, as part of your budget as well, you also need to factor in that if you have a credit card, that they're actually those regular payments.
You need to pay that.
That you need to pay that as well, and also manage that expenses.
Right.
Of course, the biggest challenge is that in terms of, because of the convenience, it's possible to spend beyond your limit. So again, it's also a discipline issue that the one needs to look at.
All right. And even as we talk about individual finances, businesses, especially small businesses, of course, with any businesses, when business is good and at times business is bad. But, for small businesses, when people are struggling in January, then the small businesses also struggle.
Yes.
So what's the best way for businesses to reduce business costs at a time like this?
I think in terms of businesses, similar to what I've talked about in terms of the personal financial management, income and revenue also, depending on the type of business it is, it could also be seasonal. So you may also need to also have that saving, that, setting aside funds, because like every business has obligations. So one of the things that one needs to be able to do is, as a business person, is to be able to keep track of your income, all your costs. You need also to see how you can enhance your efficiency. It could be through technology, because these days there are very many software applications that can, for instance, help you in terms of doing your accounting and preparing your financial records.
Right.
That helps you to keep track of your business. It also helps you be able to know, am I making money? Am I not making money? It also enables you to, now going on beyond that, as a business person, is also to see what are your growth projections. Because as you start a business, you also have a business plan that you're looking at what opportunities am I exploiting? Where do I want to see my business in the next 5, 6, 7 years? And you need resources to be able to do this. So the resources could be available from your cash flows, your internal revenue that you generate as a business. It could be from borrowing, from a financial institution. For that, you can be able to expand. So I think the first point, again, is also in terms of the business plan, and actually that financial plan that helps you to be able to manage your business effectively, and keeping track of your expenses so that you can be able to ensure that, they don't spiral out of control and you're unable to meet your obligations. Yes.
And of course, even as you give these tips, we do have people whose debt problems are already serious, right? People who've been blacklisted by CRB, for example.
Yes.
Where do such people begin getting help? What institutions can they approach?
It's true, yeah. There's been a lot of coverage lately, about businesses that have experienced significant challenges in terms of meeting their obligations. One, I think there are consultants, in the market that look at, assisting businesses in terms of recovery. There are also opportunities in the sense that you may also actually come across an investor who's looking to invest in the kind of business that you're doing. And if they're aware that, there's a business that offers these opportunities and maybe is experiencing some challenges, you could come up with an agreement where they invest in your business and take up some shareholding, and in that way help you in terms of managing those expenses in addition to taking up shareholding in the business. There are also a lot of small, SME. The SME sector has grown considerably over the years. So there are a lot of, I would say, either incubators, businesses that incubate, small businesses, or even NGOs and other types of businesses that help small businesses in terms of different avenues or areas of their businesses, including financial management, including capacity building. For instance, in terms of how to see whether you can be able to manage your rental costs. For example, there are now businesses that help in terms of setting up, housing you in what you call office premises that, you don't have to commit yourself, what you call shared office premises, especially with the IT-based businesses where you don't actually have to be domiciled in a particular, location for a considerable period of time. So there are now a lot of structures and the companies now in the market that help you in terms of being able to help you in terms of capacity, in terms of your personal business. So yeah, there are those forums. And I think, again, it's a question of information.
So it's not all doom and gloom.
No, it isn't.
All right. So let's wind up with a last question from one of our viewers on Twitter asking, what are the factors to consider when choosing a bank, especially when it comes to a savings account?
Well, in terms of banks, the important thing is the financial stability of the particular institution. You may have seen in the last 1 year or so, we've had quite some challenges in terms of the banking sector.
Right.
But again, from a regulator perspective, I think these are now been seriously addressed. So I think it's in terms of financial stability. On a regular basis, banks are required to publish their financial accounts in the newspapers. And that way, one can be able to track and determine the strength of a particular financial institution, whether it's the liquidity, the financial base, the shareholder funds. Again, this is publicly available information. You could go to the website of a particular bank, and that way you'll be able to see how well the bank is doing. You could also consult financial advisors who would help you in terms of giving you the assessment or analysis of the strength of a particular financial institution. Yes. All
right. Einstein Kihanda, the CEO of ICEA Lion Asset Management, here on Morning Express to speak about your money. I hope you got something about how to manage your money and your finances for the year 2017. And that brings us to a close here on Morning Express. Thank you for watching. My name is Michelle Ngele. Do enjoy the rest of your viewing.